Even though gold has failed to breach 1,300, our next guest says 1,400 may be in the cards. Mike McGlone of Bloomberg Intelligence joins us now. Mike, good to have you back on.
Hello.
So is 1,400 the new $1,300 gold here, Mike?
Well, you notice that's a research piece I wrote. You have to look at gold in the bigger picture, and people talk about short-term overdone. It's just doing what it's supposed to be doing in this environment. The dollar looks like it's done with its rally. Remember, we had this massive buy-the-rumor rally. Since the Fed has started tightening, the dollar's gone down, and gold has been the best performer. In fact, it's actually outperforming the stock market. So look at it this way. In a tightening cycle,
right,
gold is supposed to outperform. Historically, it has. It's doing that. What happens if this cycle stops, which is the risk right now? And gold's could potentially indicating that. By doing well versus other commodities, bonds going, yields going down. So that's what I see. It's just going up to the next level. And by the way, it's basically only at just barely above the 52-week moving average.
So the last time it hit 1,400 was back in 2013, right? So this is not something obviously you expect to happen overnight.
I'm not so much predicting where it's going to go. I'm just pointing out it's up to a next level. And that is partly because its main adversaries, strong dollar, is basically gone. And if that's going to continue, gold will have a problem. And the stock market. If the stock market continues to blast off, it's great. But volatility in the stock market as a 26-week moving average is the lowest since pre-crisis. There's not much room for it to go anyplace but up.
Now, some analysts I speak to say, look, it's just overheated right now. What do you say to that?
There's no sign of that in futures markets at all. Now, the number one way that gold really moves around is futures. I mean, compared to like ETFs, it's the most dollar value trading. And compared to last year when futures positions and open interest got way overdone, they're completely neutral. Now, silver's a little bit risky. Silver futures managed positions and open interest are at last year's high, which is kind of risky and it's scary to me. But gold is, I look at it as neutral. And all it's really done this year is mean revert.
All right, anything else you think we should be paying attention to? You spoke about silver, mentioned gold.
What I'm really concerned about is the fact that yields are going down. Gold is one of the best performing commodities. And and copper is underperforming. Copper positions way overdone. If these trends continue, it's a sign that the Fed would be done.
All right, Mike McGlone, Bloomberg Intelligence, thank you so much for joining us.
Thank you for having me.
And thank you for watching. We'll have Frank Holmes up next.